Has the minister presented the amendment?
Well, not yet, but I think the whole country is waiting for that presentation with anxiety.
Should we be scared?
Maybe a little. I mean, if you know, it's an election year, so parliamentarians are looking at being popular. So they think that this bill will make them popular to the people on the ground. And they are very excited about the bill without actually thinking through the repercussions of what the bill will mean to the economy.
Yeah. So assess for us, William, if you can, about the prospects of this actually coming into law. How real is the threat that we could actually see the Kenyan government, a champion of capitalism and private sector involvement in the economy, passing a law that regulates interest rates?
Well,
go on.
The way it works usually is the central bank regulates the banks using the interest rate.
Yeah.
And so with this, they are able to manage the inflation rates and to do stuff. Now, when you cap the interest rate and you say that the banks are only allowed to charge 4%, 4 percentage points above the CBR, it means that the banks do not have room to maneuver. The impact of this is that when the central bank raises the interest rate so that the inflation can be contained, it will not happen within a specified, for example, today we are at 18%. What 18% can do will need to be done by 25%, right, because the amount of money it's supposed to attract, it will no longer attract at that same level.
Yeah, but William, how real is the possibility that we could actually see Parliament being able to pass this law and regulating interest rates?
Well, we are all hoping that it's just a bluff, that that they are doing to the executive.
Yeah, but William, I mean, William, do they have the numbers in Parliament to actually pass this bill? That's my question.
Well, I think they do. I actually think they do because both the head of state and the Prime Minister were in Parliament last December to try and mobilize them to think through what they're about to do, and no one was giving them an ear.
So, if they do pass this law, let's talk about the consequences. Who's likely to be hurt here? Who's likely to benefit?
Well, they are the ones to benefit by being popular because the people on the ground might think that they have actually done something good to make them access cash at a lower interest rate. But generally, the economy will be affected because, number one, the average lending rate today is 19.6. If this is enacted, then of course the average lending rate will rise to 22%. That's number one. Number two, being that now the CBR is at 18% and we are seeing the impact of that in the economy because the inflation rate has gone lower, and the shilling is more stable today. I mean, when this is enacted, that might not be able to be done by 18%. We will need to see the CBR going even to 25%, so that now the interest rate, the interest charged by banks can now go to 29%, and the impact that is required in the economy is actually felt.
Yeah, but long term, I'm sure the effects of this are going to be felt for a very long time. And also, just in terms of what it says about Kenya's economy and the return of state controls, which was tried with prices for some of the commodities and abandoned, the damage long term, how much do you see it having on the economy?
Well, absolutely. The long-term effects are actually even scarier because, you know, they have tried with the price controls with the fuel. It hasn't worked. They are now going to try it with essential goods. It's not going to work. I think that the problem with the Parliament is they are looking at the results. They are not looking at the cause of why we are where we are today. And that is, we are importing a lot of things. There has not been a considerable amount of investment in agriculture. And that is actually where they need to look at in terms of the long term, and the inflation rates will come lower.
Yeah. What are the implications for the stock market? Because we do know, of course, that this is going to affect everything from earnings to people who come in to buy Kenyan assets denominated in the Kenyan shilling. So, for instance, foreigners will look at Kenyan bonds, will likely say, oh, okay, these yields are now higher, perhaps we should be looking at this market. But let's perhaps begin first of all by looking at the stock market and then look at the implications for bonds.
Right. If you may, let me start with the bonds and mention something on the effect. The law seeks to minimize the amount of money that the banks can actually charge on the deposits. And that will also affect the bonds, because now the central bank will be forced to raise the level, to raise the interest rate so that now banks can make more money. But now coming to the stock market, mostly it will affect foreign investment, which makes a very good percentage of the local stock market activity. And that will effectively really make business here to be very boring, if not tragic. Yeah, so we are all hoping that this will not actually take place.
I certainly hope they don't have the numbers. William Odhiambo, Managing Consultant, Elim Consulting, joining us live from Nairobi. Thank you for your time.